our stock of the day. Mark was just talking about it. Netflix. It does report tonight more than 260 million global subscribers. In fact, that's a bit inaccurate because they don't actually release those official figures anymore. It does report second quarter results after the close. Full year guidance still an effect of 12 to 14% revenue growth, operating margin and more than 31%, advertising revenue $3 billion, doubling year on year. Now, in terms of expectations, Wall Street anticipates revenue growth of 13.5%. Investors also scrutinising viewer engagement. As I mentioned, it no longer publicly reports subscriber additions. The stock trading just above its 52-week low. Options traders pricing an implied post-earnings volatility swing of about 8% in either direction. Mark, let's start with you. You were talking about it. Is it also expanding beyond streaming into mobile games, interactive shows,
podcasts,
all
sorts? Yeah. I think it's been. I'm a shareholder, not a big position, but I've been a shareholder for quite a while. It's done very well for me. I think going forward now, I think the challenge is, and just from what I've read lately about it, is that that viewer engagement has been dropping off. As far as how many hours per week. And there's plenty of competition, and so I think the market sort of got to a point where it sort of is changing to somewhat. And I think whether Netflix can really bump revenue, they haven't had any blockbuster type series like they used to. Because you used to remember when they did House of Cards, that's really what at the time. Remember, everyone said they were crazy, spending all this money producing their own content. They were going to go broke, blah blah blah, and it absolutely put them onto a fantastic path. Now what we have is a whole heap of video being generated by AI, and that's getting better by the day. Now that's a threat and an opportunity, because from a Netflix point of view, because they're spending a lot of money on creating their own series, their own content, and they've got a big back catalogue as well. It's how much is that going to help them versus the competitive threats, if you like? Because I think YouTube has been put up as being a significant threat to them, because the short format, super low budget or homemade videos are getting a lot of currency. Yep. And if that becomes more of a stronger entertainment medium further, does that stop people subscribing to Netflix? I don't know. But I think there's quite a lot going on. I'm not selling my shares. I'm quite happy to stay. I'm going to watch there with great interest. But it's not a life-changing investment for me. So if I had 20% in it, I'd be much more. I'd have to have a stronger position than I have.
So it has come off about 40%.
Yeah, I'd say I'd be tempted to buy some more, but I'll see what the report is for a start.
Yeah, okay. Wait and see.
I don't have a plan.
All right, less than 24 hours to wait until perhaps you can pull the trigger on that one. So we'll call it a hold with.
Hold.
Yeah, look to make a decision tomorrow, perhaps. Kai, how do you see it?
Yeah, no, absolutely. I mean, it's one of the biggest, largest streaming platforms there are. There's 300 million users on there. But again, as Mark alluded to, it's more about user engagement at the moment, because I think a lot of the investors are worried that the original content that was on Netflix before, that's really what blew it up, right? So I haven't, just personally actually going on there, I haven't seen as many of these new series being released. And I think it's pretty common with other users as well, right? The user engagement's going down. But the benefit is they do have a massive platform, 300 million people. They're trying to go down in terms of gaming. I don't know if it's the right thing to do, because to me, that doesn't seem the right route. One, how do people engage with Netflix on a gaming platform, right? It's not the domain they're usually in. So it's a tangent, but I don't know how well that will play off. It's a risk as well. One positive is that the advertising revenue is going up, but again, to sustain that platform, they need to have good content to keep the users there. So in terms of the financials, they're growing, they're plodding along, year-on-year growth is at 16%. Valuation's really cheap. So compared to historical at about 40 PE or so, it's at 23. So it is discounted at the moment, and if you were going to buy, it's actually not a bad time to buy. I would wait till after earnings release, but it's cheap. Yeah,
I agree.
Okay, so whole potentially look to buy.
There's one other thing to add to it. I've noticed, I've watched a fair bit of Netflix, is a lot of the new series they've come out with lately have been pretty poor. I think the quality has gone right down, and a lot of them are you sort of start watching them and you think, do I continue watching this? This is not looking really good. And then you
give it a thumbs down.
Yeah, and then you're better off cutting out, because usually it doesn't get better if it starts off poorly. But I think the quality's gone down, so I've gone back to watching the old ones again. I went back and watched the whole House of Cards series, because I've forgotten most of it, and I'm watching Homeland again now, and I'm really enjoying it. So, you know, they're good series.
It's funny. My wife and I were having this discussion just last night, saying there is nothing to watch on Netflix, so we
Go back and watch the old ones,
No,
because
no,
they're years
we-
ago. You forgot, unless you remember it all. I remember bits of it.
We just went to a different streaming service. There you go.
Yeah.
Okay, all right. That is the view then on Netflix.